Okay, so you're ready for retirement, right? But you want to make sure those savings last as long as you do right.
Yeah, and you want to maybe even see them grow a bit, but
Yeah.
without taking huge risks, right?
Right. I mean, who wants to lose sleep over market swings when you're supposed to be relaxing, right? So today we're going to look at one option for that.
And
And
see if it's a good fit.
exactly. So this is a deep dive into the Zenith Growth 10 fixed indexed annuity from National Life Group.
And we're working from some great info from Diversified Insurance Brokers on this one.
Yeah, they really laid it all out.
Let's break it down.
All right. So first things first, just remind us, what is a fixed indexed annuity?
Yeah, so basically it's a way to potentially grow your money based on how well certain market indexes do.
Like the S&P 500.
Right, exactly. But here's the key thing. You don't lose money if the index goes down.
Okay, that's the downside protection we keep hearing about, right?
Exactly. Your principal is safe.
Got it. So the Zenith Growth 10 specifically, how's it actually track the market?
Well, it gives you some choices, actually.
Oh.
So you can link your returns to the S&P 500 or the U.S. Fundamental Balanced Index.
That's the one from PMMCO, right?
That's the one, yep. Or you can even go with the Global Balanced Index from Societe Generale.
Okay, pretty diverse options.
And then there's different ways to calculate the interest you earn.
Okay, like what?
You can choose strategies that look at the index growth over 1 year or 2 years, what they call point-to-point.
Mm-hmm.
Or there's even a monthly sum cap strategy that limits how much interest is added each month.
So you can pick the approach that kind of matches your comfort level.
Exactly. It's like choosing different paths to the same destination.
Right, makes sense. No, I saw something called a rate booster. What's that all about?
Yeah, that's an interesting one. So it's optional cost and extra fee, but basically it can give you higher participation rates and caps.
Yeah.
Especially when the market's doing well.
So potentially more growth.
Potentially, yeah. But it doesn't guarantee anything.
Got it. It's like adding some turbo if the conditions are right.
Yeah, exactly. A good analogy.
Now, what about if I'm not ready to jump all in at once? You know, I want to ease into things.
Right. So for that, there's this thing called dollar cost averaging, or DCA for short.
Oh, okay. I've heard of that.
Basically, your initial investment gets spread out over 12 months. It's allocated gradually to those indexes we talked about.
So it helps to average out the market ups and downs.
Exactly. And that can sometimes lead to a better return over time.
And it's definitely less nerve-wracking, you know?
Yeah, DCA can be a good way to manage that market anxiety.
Okay. Makes sense.
Yeah.
Now, what about emergencies? What if I need to get to that money before retirement?
Right. So starting in year 2, you can actually withdraw up to 10% each year without any penalty.
Okay, that's good to know.
And there are waivers for certain situations, like if you need long-term care or if you're facing a terminal illness.
So they've got you covered on the unexpected.
Yeah, and there's even an emergency access waiver for things like disability or job loss.
Okay, but I imagine there's some fine print on that one.
Right. Needs plan approval, of course.
Makes sense, right? Now, what happens to the money if something happens to me?
Well, the full amount in the annuity goes directly to your beneficiary.
That's good. No hassle for my family.
Yeah, and it avoids probate, which can be a real headache.
And no withdrawal charges for them either, right?
Right. It's all taken care of.
Good to know. Okay, what about taxes on the growth? How does that work?
So all that growth inside the annuity is tax-deferred.
Meaning?
You only pay taxes when you take the money out in retirement.
So it's like a tax shelter for now?
In a way, yeah. And it lets your money potentially grow more because it's not being taxed every year.
Okay, that's a nice bonus. All right, tell me about National Life Group themselves. I mean, are they trustworthy?
They've been around for a long time, almost 175 years.
Wow, that's impressive.
Yeah, and they're a big player in indexed annuities and employer-sponsored retirement plans.
So they know what they're doing.
Yeah, their track record speaks for itself, I'd say.
All right, so let's sum this up then. With the Zenith Growth 10, you're aiming for market-linked growth, but with a safety net against losses.
Right.
You've got different ways to tap into that growth.
Right.
There's that potential boost with the rate booster if times are good.
Right.
DCA to ease into the market if you prefer.
Exactly.
And you've got options if you need access to the money.
Yeah.
Plus, it's all backed by a well-established company.
That's the gist of it.
So it's really about finding that balance between growth and security, right?
Absolutely. I think that's what a lot of people are looking for in retirement.
So for you listening, how might adding an annuity like this to your portfolio change your overall retirement strategy? Could it maybe allow you to be a little more aggressive in other areas, knowing you've got this safe and steady base?
Yeah, I think it's definitely worth considering how it fits with your own personal goals and risk tolerance.
It's a great point because everyone's situation is different, right? So thanks for joining us on this deep dive into the Zenith Growth 10.
It's been a pleasure.
And we hope you'll keep diving with us into more retirement topics in the future.
We'll see you next time.